get straight into our results service now. In the Johannesburg Power Lunch studio is Graham Briggs, the CEO of Harmony, whose quarterly and year-end numbers were released earlier today. And it amused me, made me smile a bit when I saw the sort of poetic way that Graham Briggs, the CEO, introduced the press release. He says the Harmony, what did he say? Harmony of today is a different one to yesteryear. That tells me you're quite happy about things, Graham.
Yes, very happy, Lindsay. Hi. You know, we've done a lot of things during the last few years. We've arranged to, change the company completely. We've done things differently. We've spent a lot of money in the right places, and so it is a different company. We've done great things in the company, and it's starting to show in the results, and that's why we sort of almost a bit boasting on where we are.
Well, let's get the bad news out the way now, because despite a 14% increase in your production, you actually made a quarterly loss of 20 cents. Headline loss of 20 cents a share. I'm just reading this from the report now. That's for the 3 months to the end of June, down from a profit of 234 cents the previous quarter. What happened? Is that cost going up, Graham?
Yeah, it's not actually, Lindsay. It's all good news, in fact. One of the things is that at the end of the year, you obviously bring in various things, and we've looked at our plans. When the accountants get hold of the plans, they say, oh, you guys are going to make lots more profit this year, this coming, in the next few years, and therefore your tax rate's going up. So the government should be happy. Our tax rate's probably going to go up from somewhere around 24 to 26%. So that's good news. Good news for us, because we're going to have, good profits in the future. We are spending quite a lot of money on exploration. During the last year, we spent 500 million rand on exploration. That's a big exploration bill for a relatively small gold company like ourselves. We're having lots of success there. So these are the sort of issues that come up, which come in somewhere near the bottom line and sort of change what looks like an excellent quarter into a loss. But in fact, these are sort of once-offs which really change the company. The other one was depreciation and amort. Because we had a very good quarter, it obviously increases that cost a bit. So, these are not cash costs. If you look at the total company, we made very good profits this year. We made good profits this quarter. If you look at the year, we've got 80% more operating profits based on only a 38 or 36% increase in the gold price. Now, that's a very leveraged company, and we've been able to capitalize on the gold price.
Yeah, let's go to those year-on-year numbers now. As you says, an 80% increase in operating profit. Gold price up very nicely. Gold price coming off a bit. We'll come to that later on if we can. Production down slightly though, but on the quarter-on-quarter basis, the production up 14%. So quite a volatile sort of production profile you've got at the moment. What was the reason for that 14% increase, Graham? Was it coming off a low base from quarter one?
Yeah, no, the quarter before that was the one of the low base. So we've got back into the sort of quarters of the former two of the year. So the first and the second quarter of the year were okay quarters. The third quarter was the poor quarter, and we've got back into a better quarter. So it's a little bit of getting back to where we should be for this year.
Let's have a look at costs now. I think 20% up in rand terms, 8% up in US dollar terms. The main drivers of that, and is that cost increase a concern to you?
Lindsay, it's several issues. Some of the issues are some operations were capitalized and now they see them at working costs. Now, that's something that's sort of not a normal cost. If you look at our sort of year-on-year costs, they're still intact with CPI, a little bit above CPI when it comes to things like electricity, of course. But we're managing to sort of come under the increases of electricity. So if we see electricity going up at, say, 16% like it did in the beginning of April, then we're managing to come in sort of probably around 15% because we are doing some savings. So the once-offs again in capitalizing was capital, now working costs. It's reflected as a working cost increase there, but in fact it's still costs. So it's really a change of a financial category.
Can we have a quick look at your operations in South Africa? Maybe you could give us a general overview of the last year's operations, either the highlights or the lowlights or both.
Yeah, I think the highlights have to be the continuing ramp up of our newer assets, Phakisa, Doornkorp, Kusasalethu's had a fairly static year, but it's had ups and downs during the year. So continual ramp up in the quarters for some of our assets. A recovery of Joel into really having being able to produce some great results. So there's those sort of things which are really on the good side. On the bad side, we have been struggling a little bit with grade on some of our operations. Particularly Chipong has been a difficult grade. Having said that, Chipong is still a very profitable mine, and so there have been some disappointments during the year. We are very happy with where we're going to on safety, but when you go back into safety, we're disappointed with the fatalities we've had, and so we've been spending a lot of money and effort and time on the whole strategy around safety, and if you look at our statistics on safety, they're all pointing in the right direction. So that's good news. Our recent awards that we won in sort of Mine Safe, we took away 6 of the 7 awards in the gold mining category. So it all points to, we're doing the right things.
Yeah, very good indeed. Great progress made there. A very difficult subject. Other difficult subjects we may get a chance to talk about, i.e. labour issues. I mean, the platinum industry, we know, having terrible labour issues. We'll talk about yours if we get a chance. But let's talk about something that you alluded to, in other words, your exploration costs. And let's look at the excitement surrounding Papua New Guinea. Maybe you could tell us exactly where you are there.
Yeah, Lindsay, that's a joint venture, as you know, with Newcrest, Australian mining company. It's a big project. It has over 1 billion tonnes of ore in it. We've been doing a pre-feasibility study on there. But as we unfold the geology there, so we do more and more drilling. In the last quarter, we did another 3 holes into the upper levels, and we found some great results. 2% copper, 1 gram a tonne gold type of results. And this is over very large widths. We continue to be surprised and find more. And although we're in that pre-feasibility study, sorry, you just can't put, all the information in it. So it'll continue to get revised. I think our exploration guys in Papua New Guinea are really doing some great work. There's some stellar stuff they're doing. We've got exploration areas that we as Harmony have 100%, and we've got stuff that's really looking good with the potential of finding more ore deposits.
It does sound exciting. The mine, it says here, is expected to cost around $4 billion US, and that's between yourself and Newcrest, is it? 2 billion each, should these numbers be correct?
Yeah, the number I think officially that both companies have got out is somewhere around 4.5 to 5 on a 100% basis. So that's 50% would be to our account, and that's to get Golpu into production.
Gold price itself has come off as the market went up to 1920. It got a case of vertigo, come back down, hovering around the 1600 mark. What are you seeing at the moment? Is it something that is a natural sort of cyclical a commodity play, and we're just sort of marshalling our troops in order to push higher, or is there a sea change in the investment sort of view on the gold price?
Lindsay, I think gold price, I'm still very bullish on gold price, as is our company, as is our board. We have seen the sort of gold price being around the 1600 mark for quite some time. In rand terms, we've got a very good gold price at somewhere around 420, or maybe a little bit north of that, depending on what the exchange rate's doing. And remember, most of our production is in South Africa, and therefore the South African rand, rand per kilogram is important to us. What we have seen, internationally, is there's a lot more scrap gold on the market. Scrap gold is, yours and my grandmother's jewelry that we take to the local pawn, and we get some money and be able to pay it. So a lot of scrap gold coming out of Europe, for instance, less scrap gold coming out of East, which would tell you that the Asians are sort of more bullish on gold. So a lot more of the gold, if you look at sort of mine production, it's fairly constant year on year, probably for the last 5 years, close to the last 5 years. But scrap gold has come up quite a lot. So in essence, there's more gold on the market, and to keep the price at 1600, I think, is good. But that scrap gold's not going to last forever. People eventually run out of the old jewelry and so on. And so we see the gold price going up in the future. And of course, there's all the economic issues of the world, and gold is seen as an investment and a safe haven. And you know, if you were in Europe and you had €1 million, would you keep it in euros? Could you put it in the bank, or would you know, buy gold? I guess those are the sort of investment decisions you have.
Indeed. Graham, thanks so much for your time this lunchtime. That's Graham Briggs, the CEO of Harm.